Our next guest says he sees more pain ahead for the consumer and that Wall Street is on the wrong side of the retail trade. Chris Harvey is head of equity strategy at Wells Fargo Securities. So if there's more pain ahead for the consumer, what implications does that have in terms of your market view?
As far as our market view, we think there's another 3 or 4% upside to here. We haven't been as enthusiastic because we thought the Fed made a mistake, but now that the Fed is kind of walking back, there's some debate at this point in time. What we want to see, and to this point, is we would love to see expectations come down when earnings get reported. We think that the stocks are down. Why keep expectations up? Valuation is much better. Bring expectations down, and then you can beat lower guidance. Then the market can work going forward. But right now, we've had the January effect. You have the bounce. You still have some issues with trade and tariff. You still have a lot of turmoil out there. If you really want the market to go forward, reset guidance, reset the bar, and then you can really work going forward.
So really, there's nothing to be done until we're through earnings season at this point.
I think that's true. The other thing that we're looking at is what happens to the statement. Does the statement change from the Fed? The Fed still has gradual hikes in there. There's nothing in there to say that they should change that. How does the market react if they come out with the same statement?
So, Chris, it's easy to say that corporates should be a little conservative with their guidance. Just look in the last few weeks. Look at FedEx, look at Apple, look at Macy's today, airlines. I mean, it's a dangerous proposition. Investors are shooting first, asking questions later. Isn't it easier maybe to kind of squeak out a little here and there as far as what their visibility is?
It really depends on what you want to do. If you want to hold or maintain in the short term, great. But it's going to be tough beating guidance going forward. So take the pain now. A lot of stocks are down at this point in time. Then you have good valuation. Then if things are better, you'll beat lower expectations. You'll get paid in the end. If you don't lower guidance or if you maintain guidance that's tough to beat, your stock's really going to languish for a long period of time.
But, Chris, what do you do with a market that's up 11% in 10 days? And I know you're not playing it day to day.
Right.
But you talk about stocks revaluing. First of all, the market's not going down despite these massive warnings. And
right.
Maybe it was 2 weeks ago. But are the stocks that are actually not following the ones that have not guided the ones that people should be selling here because it's inevitable?
So what we think is, so we've been up in quality and down in risk for a long period of time. However, what we're starting to see is there's more value in value. You're starting to see value stocks look a lot more attractive. The spread between cheap and expensive has widened. Absolute value is better. And if you can change guidance, I think you can work going forward. We've been in a bear market for value for a long time. Those stocks have a lot of juice in them. We just need a couple things to fall in place for them.
Where is the value? What sectors?
We see value across the board. So we've liked biotech for a long period of time. Obviously, there's been a couple takeouts there. We wouldn't chase it. We see value in food, beverage, tobacco. We also see value in REITs. If you're looking for contrarian plays, REITs are a great dividend play.
Yep.
Tell you what.
Yeah.
I'm not going to give this away, but the biotech thing, that just might be a little precursor of a little power pitch we got coming on later in the show. I'm just putting it out there now.
I can't wait.
I can
Must be
tell.
another show because we
The
get
edge of
fast
my
pitches
seat.
here.
Thank you, Tim.
Yes.
Thank you, Chris. Great to see you.
Thank you.
Chris Harvey, Wells Fargo. What do you think, Grasso?
So if they were confused about what the Fed has said and if the Fed, made sort of a mistake, I don't know how any of that has changed. He might have positioned it better in the words, but the balance sheet is still going to be reduced and rates are still moving higher. Markets should be rolling over.
To Chris's point, though, I mean, we have the next 3 weeks or so are really going to be very key. We're going to have another Fed meeting with a press conference after every single meeting, right? We're going to get through the bulk of earnings season. We will know a lot by the end of January.
We will. But what I think people are saying here about the Fed is we've also determined from these Fed minutes that the Fed is going back to kind of try to recraft their message, that they feel as if that they were misinterpreted, and in fact, maybe they were even wrong. So that is what makes all of this very different. And it kind of feels like we're just kicking this can down the road because I think Steve's talking about a Fed that has some work to do and a balance sheet that's only 11% off of its all-time high. And again, in a Fed meeting today, in an interview with Rubenstein, you actually heard that they talked a little bit about substantially lower.
I thought they were more hawkish.
Yeah, exactly.
I mean, it's sort of like it's such a flip-flop. I mean, as somebody who's observing it, you're like, where do they stand right now?
Here's the thing. If you're strategist like Chris Harvey, and you have a 3,000 year-end target for the S&P 500, you need a lot of what he just said to happen. You need a lot of corporations to take down their forward guidance for 2019. You need the stock market to go back towards those Christmas Eve lows. Like, that all has to happen soon. People need to get a little bit more freaked out about the term substantially lower balance sheet, that sort of thing. And then you can set up for low expectations and rally into back towards the
To be
high.
fair, his target is 2665.
Oh, cool. But most of them are like
So-
3,200 or something like that.
Yeah, true. I mean, and they've all been ratcheting it down.
Yeah.
I
And
mean,
his
that's
is
what
for
we've
next
seen.
week, so he looks great.